Welcome back to The Deep Dive. Today we're focusing on a really fascinating case study in fintech execution, and that's Shakepay.
Right.
It's a Canadian crypto company that found this huge success, not by, being the most complex, but by being intentionally simple and building a ton of user trust.
Very different path than most.
Exactly. The source material we've gone through for you today really maps out their whole journey, the history, this genius behavioral design they used, and how they handled Canada's pretty demanding regulatory environment.
And it all starts back in 2015. The founders, Gina Mioni and Roy Breedy, they had this very clear mission.
Okay.
They wanted to make Bitcoin, and later they added Ethereum. Just easy, safe, and instant for the everyday user in Canada.
Which was a huge gap at the time.
A massive gap.
Mm-hmm.
I mean, think about it. Crypto adoption back then was niche, super technical. Your average person didn't want to mess with private keys or gas fees or these complex onboarding steps.
It was intimidating.
Totally. There was this huge trust problem and like a real complexity barrier. Shakepay saw that what the market needed was a friendly gateway, something that felt Canadian, that worked with Canadian banks, and was built for Canadian rules from the start.
Okay, so let's unpack that right away, because most exchanges were building for traders, right? With all the complicated charts and order books.
Exactly.
But Shakepay, it sounds like they were focused on human psychology. So if it wasn't the trading interface, what was the actual mechanism that got people to engage every single day?
This was the absolute game changer. It was called Shake to Earn.
Right.
And it's so simple, it's brilliant. You literally physically shake your phone once a day, and you earn a tiny amount of Bitcoin. These shaking sats, as they call them.
So it's pure gamification.
Pure habit-forming gamification. It's not an investment strategy. It's a micro-interaction that turns Bitcoin from this abstract, scary asset into a fun daily habit.
And that's a proven model globally, isn't it? Our sources pointed to a bunch of examples.
Oh, absolutely. I mean, you see this everywhere. Look at StepN in Singapore, or Sweatcoin in the UK, where you move to earn, or even Momo in Vietnam and some of the EcoCash campaigns in Zimbabwe.
Yeah.
Rewarding a simple daily action with a microdose of value.
Yeah.
It just works.
But wasn't there a risk of it feeling, a bit gimmicky, for a serious financial company?
That's a great question, and that's where their discipline came in. The gamification worked because it was balanced, it was fun, but it had strict limits.
Okay.
There were no high-risk incentives, no gambling. It was all about daily engagement and learning, not speculation, reinforcing a positive habit, not a risky one.
So they hook the user with this clever psychological trick, but then they have to face the next huge mountain, which is the banking system.
Right.
And globally, this is where so many crypto companies just fail. We've seen it in Kenya, South Africa. Mauritius banks are hostile. Regulators are slow. How did Shakepay crack that code in Canada?
They did it with discipline. And that discipline built their single greatest asset, which was trust. In a market like Canada, which is, very conservative and values stability, they didn't treat regulation like an obstacle. They saw it as the foundation.
So what did that mean in practice?
It meant, first, rigorous alignment with M-Track. That's Canada's Financial Intelligence Unit.
Right, the anti-money laundering body.
Exactly. And second, being completely transparent with their KYC, their Know Your Customer processes.
Can you just quickly spell out why that KYC part is so important for the listener?
Sure. KYC is basically the identity verification that financial institutions have to do. For a lot of users, it can feel invasive.
Yeah.
But Shakepay was really clear about why they needed the info to comply with the law and protect the system. And that transparency was a world away from competitors who were, operating in the shadows.
And that discipline is really what separates them from those huge global collapses we saw, right? Like FTX or Celsius.
Fundamentally, those companies were a mess internally, opaque, risky, and they were actively avoiding regulators.
Yeah.
Shakepay did the exact opposite, and that gave Canadian users a real sense of security in a really volatile industry.
And that compliance focus came with another huge advantage. Speed.
Yes.
They got famous for instant e-transfers. Deposits and withdrawals that settle in minutes. It made the competition, who might take days, look ancient.
And that's just table stakes now for modern finance. You can't be slow. We're in this global race for real-time payments.
Right. You look at Brazil's PIX system or UPI in India.
Or M-Pesa in Kenya.
Yeah.
Consumers everywhere just expect money to move instantly now. Shakepay knew that if they wanted to feel legitimate, they had to deliver that speed. They turned a huge friction point banking delays into a core advantage.
So this all raises a really interesting question for me. In a crypto world that's driven by hype, thousands of different coins. Why did Shakepay stick to just Bitcoin and Ethereum for so long?
That's the strategic restraint you mentioned earlier.
Yeah, they must have left a lot of money on the table.
Right. They did. But by avoiding all the speculative altcoins and these high-risk staking pools, they were sending a very clear message
And what was that message?
that they were about security and long-term value, not short-term hype. The sources describe the typical Canadian user as pretty measured, pretty cautious about unregulated stuff.
Okay, that makes sense.
Shakepay spoke directly to that mindset. By focusing on the two most established assets, they offered a way to participate without feeling overwhelmed or exposed to, the next big collapse.
Like we saw with Terra Luna, a lot of exchanges got burned on that.
Terribly. And Shakepay just sidestepped that whole disaster. They definitely lost out on some trading fees in the short run, but they gained this incredible amount of long-term trust, which is priceless.
And you can see that same discipline in their branding, too. It's all very warm, friendly, local.
Yes, very accessible language.
Right, they avoided that aggressive, tech bro tone that's so common in crypto.
It's a strategy with huge global parallels. I mean, think about Nubank in Brazil, with its friendly purple brand that took on the big stuffy banks.
Or Monzo in the UK.
Exactly. Shakepay never tried to be a casino. It positioned itself as your friendly, local guide to this new world.
And that extended to community, right? They really nurtured that.
They really did. They understood that owning Bitcoin it's cultural. It's not just a financial transaction. People want to feel like they're part of something.
So how did they build that?
With super fast customer support and really transparent communication, they built one of the most active fintech communities in the country. It's an advantage you just can't buy. We see it in places like Argentina or Nigeria, where community and education drive everything. People want a shared journey.
Of course, the platform had to evolve. And a huge step was the Shakepay card.
Right, which was a very logical next step.
It bridges that gap between digital assets and spending in the real world. You make a purchase, you earn Bitcoin back.
A very powerful loop. But again, and this is so important, they did it with that same risk governance.
How so?
The card rewards were funded by standard merchant fees, the interchange fee, not by some unsustainable high-yield scheme that could blow up.
Unlike a BlockFi or a Nexo, which ran into huge trouble with that model.
Precisely. The card was their move into the daily payments ecosystem, but they did it responsibly. It was about integrating Bitcoin into your everyday life, not gambling with your deposits.
So when you put it all together, what's the core emotional promise here? What does this all mean for the user?
I think the promise is that Bitcoin should be easy. And that message really hits home for younger Canadians especially.
Why them specifically?
Well, many feel locked out of traditional ways to build wealth, like, the housing market. It's famously inaccessible.
Yeah, to say the least.
Shakepay gave them an alternative, an accessible way to save, to feel like they have some control over their financial future. It's about financial inclusion.
So if we pull back, the Shakepay story really offers, 3 key lessons for founders or for anyone listening?
I'd say so. The first is that aligning with regulators isn't a burden. It's your foundation for long-term trust.
Okay. What's the second?
Second, narrowing your focus can be way more powerful than feature overload. Simplicity and speed for your core users. That's what wins.
And the third lesson has to be about community.
Absolutely. Community and transparent communication. That's a competitive advantage that no one can copy. At the end of the day, Shakepay proves that real innovation comes from disciplined execution, not from chasing hype.
So to leave you with something to think about, we've talked about the huge value people all over the world place on instant payments, PIX, UPI, M-Pesa. How much longer can exchanges that still rely on these old multi-day settlement times really survive, even if they offer thousands of coins? Speed and trust, they aren't features anymore, they're the price of admission.